You are listening to Investing Matters, brought to you in association with London South East. This is the show that provides informative, educational and entertaining content from the world of investing. We do not give advice, so please do your own research.
Hello and welcome to this Investing Matters podcast. My name is Peter Higgins. Today I have the huge privilege of speaking with Iain, Chief Investment Officer at Netwealth. I had the fantastic privilege of having Iain joining me on the Investing Matters panel at the Master Investor Show back in April, I think it was, Iain. And we did brilliant with an all-star panel there. So thank you for coming back for some more. I promise you, Iain, that we're not going to get any questions today about a potential World War III scenario. Okay?
Okay, that's a good start.
Yeah, thank you. So, Iain, please can we start a little bit, please, regarding your background, where you grew up, what you studied, and where you studied when you were, young man.
Okay. So I grew up in a bunch of different places. Actually, I grew up. I was born in Essex, but then very soon after that, my parents took us on a bit of an international journey. So I lived in New Delhi in India, and then Karachi in Pakistan, up until I was about 11, and then came back to London, studied there, and then went to university up in Edinburgh, where I studied history. Great times all round.
Yeah. What can you tell us a little bit about all that then? What was the journey in New Delhi, Karachi? What were your parents doing in a sense of career-wise for moving around with that sort of frequency?
So my dad worked for a bank that took us out to New Delhi. We spent 4 years there, I think, from the age of 4 up to 8. And then a further 3 years got bumped along the road down to Karachi in Pakistan, and then doing the same job. And then he got rerouted back to London briefly before then. Eventually, he headed out to the States and carried on a bit of a nomadic journey from that point.
Brilliant, absolutely fantastic experiences for you. So, what did you study at Edinburgh University?
I studied history, with a focus on modern history, but quite a wide-ranging degree, which was great fun. It was 4 years, which was part of the attraction, I think, when I was 18, trying to delay the inevitable of getting a job, because it was a bit cheaper back then. And yeah, had a wonderful time. So I've got a lot of family who are based up in Scotland, so really enjoyed going up there.
Brilliant. Now, I want to talk now about your first job, in the investment industry, because obviously prior to joining Netwealth, you had 15 years in multi-asset management, investment management, holding senior portfolio roles at Schroders and UBS Asset Management. Please, can you tell me a little bit about those significant roles, including assets under management, and what your responsibilities were, please?
Yeah, sure. So I joined the graduate training program at Schroders around the turn of the century, sadly enough, and it was a great formative 10 years, and a wonderful start to the career, learning lots of different aspects of investing in a really fantastic organisation. I worked originally within the European institutional team, looking after balanced mandates there for institutional clients, at a time when the investing and businesses side were more sort of co-joined, and then that evolved into working directly for multi-asset portfolio management. So looking after some funds which were distributed via different advisors around different locations, and really with a quite a wide remit in terms of picking different funds, but also managing the overall sort of exposure within about a 5-person team. And that was a great experience. I left there to go to UBS, so on the institutional side again, so asset management rather than within the wealth management world. and again developed a responsibility for income-oriented strategies, so running multi-asset portfolios but with an income orientation. And I was one of the voting members of the asset allocation committee there, which oversaw quite a broad remit in terms of geographic and sort of different product lines there.
Thank you for sharing that. You touched on that you started at the beginning of the century, and also the fact that multiple different skills that you attained during that time. What were your greatest learnings over that 15-year period?
Oh gosh. Well, I think I think that if we think about it, so starting work in the city in 2000, you're sort of right there when the original .com bubble was bursting, and I think the turbulence of that journey was quite an education, like right from the start. And the one thing I picked up from all of the the great people that I've worked with is this: you've got to have a bit of a mentality, I think, when looking after people's savings and investments, that the environment that you're in any one point in time will pass at some point. So try to keep a very level head in terms of understanding what's driving markets at a particular point in time. Try to strip out a bit of the noise that inevitably sort of takes place, and I guess arguably you could say has increased through time. But just focus on what you're trying to do with different investment strategies, with a view to delivering on the ultimate goal of helping your investors stay invested and reap the rewards that investing in markets can give you.
Thank you for that reply. I appreciate that. Now, Iain, you joined Netwealth and their exceptional award-winning CEO and co-founder Charlotte Ransom, and the outstanding co-founder Tom Salter in early 2016. What attracted you to what essentially was a startup for hybrid wealth management service? And what was your initial responsibility there? Because you'd taken a big leap of faith, really. I thought. I'm sure your family thought that as well, maybe.
Yeah, they certainly did. No, I think it's it was the idea that you'd be joining an organization right from the start, and having had a great education in in substantial companies, being put in a position where you had ultimate responsibility for a meaningful part of the business, and the opportunity to really have an impact of helping something grow right from the start, which really excited me. And I think having worked on the institutional sides, quite often building strategies that were then sort of managed with a view to being distributed through wealth management arms sometimes, I felt I had a good sense of what wealth management clients were really after, and I felt that there was a really great opportunity to break into a market that we didn't really feel was sort of fit for purpose as things stood when we launched. And so the opportunity to really make a difference, not just in terms of individual client outcomes, but also in terms of sort of shaping a company the way we think it should be made.
Brilliant. I love that response. I love that you're wanting to get there from the ground up as well and take that leap and actually make it work. And it's been a huge success, which we'll talk about a bit later on. Thank you for that. Please, can you then share with me an overview of Netwealth and its innovative approach, please?
Yeah, so Charlotte and Tom started Netwealth in 2016, really with a view of taking the best bits of a traditional wealth manager. So I would include competent portfolio management within part of that, but a human-led investment approach, access to quality and experienced client advisors to provide human-led advice when necessary, but sort of wrapping that up in a more technologically enabled framework. And that's really the key, that trying to get that flexibility that good tech delivers for you to make something efficient and scalable, but still retain that human touch when individual clients really want it.
Thank you. And what I wanted to ask firstly about the the three pot theory. Let's go to the basics here and just get people to understand that particular nuance, please, for those that have not heard of it before.
Yeah, sure. So the three pot theory is essentially trying to help people understand the different moving parts of their savings and their wealth, and how they manage their overall picture of their financial situation. So when we think about pot one, as Charlotte would call it, that's your typically your current account, and you've got your earnings coming into that bank account, your outgoings going through it as well. And you need to have sort of a bit of a buffer there. And then we think about pot three, which we call the passion pot. It tends to be where people sort of concentrate a bit more of their wealth. So for most people, that in the UK at least, that starts with owning their own property. Occasionally, people have rental properties, or it might be something like an investment in a friend's company, or exposure to your own sort of stock holdings that you get through your work, etc. Or it might be something that you have a particular passion for. Like I say, like people talk about fine art, fine wine, or motor cars, or something like that. But these are typically long-term holdings that you either derive a lot of joy from, or you have a particular interest in building. The problem with those holdings, though, is that they tend to be pretty illiquid. So you can't trade out of those assets at the drop of a hat. And so if something happens, you want to be able to access a bit more of your finances. So the problem is that people sort of tend to allocate a bit more to the other extreme in pot one, just because they're aware that they can't access what's going on in pot three. So our approach is to say, well, what about the bit in the middle? So pot two, the best way to structure your finances is to make sure that you've got this sensible, what we would call core investment portfolio that's trying to make incremental gains, but is also readily liquid. And so by making sure you've got a decent pot two in place, you don't have to keep too much stuck in an unprofitable allocation in your your day-to-day funds. So that's why we think you can really make decent gains by making sure you've got a sensible liquid portfolio in pot two, and that's where we come in.
Brilliant. Now, if you do me a big favor here, and please just expand on the Netwealth investment methodology and philosophy that's applied across all the portfolios, please.
Yeah, so the first thing is that all of our portfolios are run, sympathetically to the overall ethos of the company. So we want to make sure that we're doing sensible things well. Now that means building in a level of diversification. So you have different assets that respond in various ways to changing circumstances, and it means doing it in an efficient way as possible. So from our point of view, that efficiency means having a centralized team that look after all of the client's assets within that Netwealth look after. So you haven't got different individuals doing different things. And that means that it's pretty scalable from our point of view. So all clients have their own portfolios, but they all look exactly the same per different risk level as appropriate. The other part of the efficiency is to invest predominantly on a passive basis. So the majority of our assets are held in exchange traded funds, or ETFs. And you can go quite a granular level to make sure that you get the right exposures within your portfolio, but it just means that you're cutting down on those, what we view as unnecessary costs. And by taking an efficient approach, it means that you're reducing those unnecessary costs, and you're increasing the amount of the share of market returns that can be passed on to client portfolios. And that's where we really focus a lot of our energy.
Thank you for that. You touched also there on the charges. Can you just expand a little bit on how your charges differ to the bulk of your peers in the wealth management side of it, in the sense of, much reduced, and how do you go about getting that much reduced cost to benefit your clients?
Yeah, well, that's really where the technology comes in. So because other people have got, what we would say a sort of like antiquated sort of technology and things creak a bit, or there's a big theme going on in the moment in wealth management, as I'm sure you're aware of different firms being bolted together at different times and trying to sort of hammer different cost structures together and different information systems together. It all becomes quite clunky. So we've built everything from the bottom up, and the technology is there to provide greater access to information for clients and to help our sort of streamlined team to be able to share that information with clients readily, and so that everyone can interrogate and understand their portfolios a bit better. So that greater efficiency spreads throughout the whole business, and the hybrid approach of making sure you've got qualified people available to do those those necessary parts, combined with flexibility from technology, is what enables us to keep those costs down. And the result, it's always hard to say, but we think average costs of look-through costs of our portfolio is probably a third to a half of the average. And so when you're thinking that you're delivering the same market returns, but at lower cost, just those returns compound like so much faster. And as you extend the time horizon, because most people are investing for a number of years, that just, it compounds faster and faster.
Yeah, it's very important to look at those costs, and say the compounding effect is absolutely huge regarding it all. Can we talk a little bit now about the demographic of your clients, regarding, where do they come to you from, in a sense of the size of their portfolio commencing to where it actually goes up to? Because it's, some people might think actually that service might still be too expensive for me. So where can people come in?
Yeah, so the minimum for a lead investor is £50,000. Now we have clients, as you would expect, who range significantly above that, and the average portfolio size is about 350 to 400. But we've got large institutions as well that have that back us as well, and sort of either quasi-institutional or charity portfolios as well. In terms of individuals, it's quite a broad demographic, as you would imagine. We work quite hard to understand where clients are coming from, and it's a real mixture actually. Some people are investing for the first time because they've been put off because they haven't found a good solution previously. Another chunk of clients come from DIY platforms, either because they've found the experience like a bit more challenging, perhaps in volatile market environments than they had imagined, and just sort of want to step back from things. Or alternatively, in some cases, it's really interesting to see. We've had some people who've started out on DIY platforms and enjoy it, have been quite successful, but really would prefer to keep it sort of as more of a hobby, and have someone else look after sort of like the majority of their assets. So if things have grown a bit too big. But I guess the bulk of clients that we're coming across are people who are unhappy with their existing provider. We think that gradually that there's a bit more education in terms of the costs that are being incurred. You still hear some really surprising stories about how unaware people are of the look-through costs that they're incurring on portfolios. But if people have had a bad experience or they're unhappy for one reason or another, and they're looking around, then sometimes they come across us. And actually, some of the corporate activity within the wealth management space is quite a good catalyst for us, because inevitably, sometimes clients don't necessarily feel that that their interests are being looked after as part of that transaction, and that's a catalyst for change. But it's quite a broad mix.
Yeah, thank you for that. I think you've touched on a really good point there regarding the consolidation that's going on regarding the asset management, wealth management space. And some people are going, well, I don't want to be part of that group. I wanted to be here. And then that offers up an opportunity for yourselves and your team. So yeah, thank you for that. Now, you touched on the fact that some people are actually moving across to your platform, and better service, lower charges, etc., are going to be attractive to them. What happens when a client approaches Netwealth with, say, a large sum of money? They've sold the business or they're moving the whole portfolio to you, but they've got concerns about the uncertainty of the markets right now. What do you put in place, and how do you go about transitioning them almost slowly if they don't want to put it all in at the same time in the market?
Yeah, that's a good point. So we can work with people with a to set up a schedule that they're comfortable with. I mean, it's always a big question for people. If they have been invested, then we typically sort of say, okay, if you're just coming out of the market just to change provider, it just makes sense to be invested, straight away. There's no reason why this should really change your overall risk profile, we would say. If people have come into money from a new source, as a one-off sort of life event that sometimes happens, then we can work with them to make sure there's a good schedule that people can stick to. And really, what we tend to find is that the best solution is just to make sure that you've got something in place that everyone's comfortable with, and that it can just help you provide the discipline, because it's always a nervous situation when people are wondering whether or now is the right time to pull the trigger on a meaningful amount of money for them. So you want to try and take that emotion out of it, if at all possible.
Brilliant, thank you. Now, Iain, it's extremely difficult for investment professionals at the best of times to keep up with the constant changes regarding pensions. Please, can you tell us about the Netwealth pension service and how your team go about ensuring they keep up themselves, but also maintain keeping their clients up to speed regarding all the government changes that keep going on, don't they?
Yeah, well, yeah, I think that's right. And so from my point of view, I just look after the investment side. The client
Mhm.
advisors are the ones who stay on top of that, thankfully. So that's sort of outside of my remit. So I would have to defer to my better informed clients on that point. But you're absolutely right that it's a constant stream of information and and changes that are really impactful for people's long-term outcomes. So quite often we're just there to be ready to provide a bit of background for people if it's not an area that they're comfortable with, and one of our client advisors is easily able to inform them of any changes. I'm glad it's not
Brilliant.
me.
Yes, I can see
Yeah.
the smile on your face. Now, given we've talked about all the various different portfolios, the pension, etc., availability of service from yourselves, can you share with us the nuance and the benefits of the net wealth network and how that would benefit, a larger group of people?
Yeah, so this is the network's something that has been really popular since launch, really, and I think it's about three-quarters of all of our clients are part of a network. The idea behind it is to be very open to people and say, okay, we recognize that you're probably not investing as an individual. All of us are, probably got in middle generation quite often, so we're sort of influencing older generation sort of investment plans, as well as our children and sort of younger relatives coming through. And what we wanted to do was to say, okay, why can't we work a little bit smarter to make sure that everyone can benefit from you as a family or a friendship group investing in concert? So you have a lead investor, say, who might come in with a pension, but if you then add a spouse's set of ISAs, or older relatives general investment account, that can then take you up, say, into the next sort of cohort in terms of the fee levels that are on offer, and everyone gets to share on the lower fee rate that bigger pot gives you access to. And it's really popular. So for myself, we've got my pensions and ISAs, my wife's ISAs, my mother's general investment account, my kids' JISAs, all wrapped together in one network, and that gives you access to the lowest possible fees. And we just think it's really nice in terms of opening up that conversation, which is so important as a family group around money. A lot of us get all too British about things, and don't tend not to discuss these things too much. And well, everyone, you're not sharing the details of your financial situation with anyone, but a
Mm.
conversation is always good around these things.
I think it's a brilliant idea, and clearly it works. And you touched on the importance there of having those conversations. And also it adds a layer of education for everybody, including, we're going to talk about your sons a bit later, for the children of the third generation. You're talking about your parents, their, grandparents, yourself, and then them. It's fantastic. Start that conversation, which we don't tend to have, I think, until it's almost too late.
Yeah, exactly. Exactly.
Okie dokie. One of the things that you have got on the platform as well, and a lot of people talk about ESG and all the rest of it. You've got the ethical side of the investing availability to clients. Netwealth have the socially responsible investing portfolios. Please can you share those investment propositions with us as well?
Yeah, yeah. So we've launched those about 3 years ago, and there we felt it was, it was important to reflect, the different opportunity set that people can choose in terms of how they invest their money. Now, it's a bit of a tricky area because, if you talk to anyone about what they think a socially responsible investing means, you get as many different answers as people you ask. So you have to try and whenever you're trying to structure an investment strategy for people, try and build something that you think is attuned to your own thoughts, but also try and capture. I think something that will excite people. Now, from our point of view, it was very important to us that we stayed quite true to the overall Netwealth ethos. So that's basically diversification, consistency, and efficiency when we're looking after portfolios. And so we wanted to make sure that we didn't lose those aspects when putting together what we call our SRI portfolios. So they're still investing in ETFs, and they're investing in ETFs that follow a very consistent approach. So you're not investing in like one US equity manager who takes, one view on what ethical investing is, and another in emerging markets who has a totally different approach. We think it's important to have something consistent, so we follow the MSCI socially responsible indices for that point of view. But importantly, we think we've tried to map the level of granularity of our core proposition to those SRI portfolios. So the outcomes will be different. No one wants to invest in something that they think is, got greenwashing in it. So it's just SRI in name only. The outcomes will be different, but they should only be different because of that, what we call factor of SRI risk. So it's most clear, say, when you're investing in the UK stock market, because we invest in ETFs that follow the FTSE 100 and then a smaller companies index as well. But of course, the UK index itself is quite concentrated in energy and other resources. So the fact that some of those are excluded because the strategies have got a very clear sort of carbon reducing objective means that your outcomes are going to be quite different there. The other important thing to note is that there is just that slight incremental additional cost when investing in those strategies, because the liquidity of the instruments aren't quite as efficient. Now we're talking from like super efficient to sort of slightly more incremental cost there, but I think it's always worth noting.
Brilliant. No, thank you for sharing that. Now, talking about the different nuances and the balance regarding these ETFs and the weightings regarding some of the stocks. We've seen this new rebalancing going on. I think it happened this week in the US regarding the S&P. And obviously, we're talking about the mega caps, which seem to be absolutely accelerating this year. Now, some of those mega US tech mega caps, including the likes of Microsoft, Apple, Meta, Tesla, Nvidia, as of market close yesterday, were soaring higher, 44% to 205% year to date, Iain, right?
Yeah.
What has been yours, you're the investment officer here at Netwealth, your strategy to attain some of that exposure year to date to AI, robotics, and so on and so forth?
Yeah. Well, it's been extraordinary to watch, right? Because I think a lot of people, have been aware of the earnings power of the consumer tech sector within the US for the past decade, but but this year has been something else. I mean, I think they've outperformed for good reason over a number of years. The US stock market has led global returns, significantly because of the consistency and of the earnings growth driven a lot by these names, the broader US sector, economy and stock market as well, but a real concentration here. I think the difference to us this year has been there's been a lot of sort of ex post justification of why these stocks have been going up, and a lot of the time, they haven't been delivering those higher, stronger earning streams. They've been delivering better forecasts for future earning streams, and I think you have to recognize that. But also, it feels as though there's just quite a lot of animal spirits acting within that part of the market. Now, one of the reasons why we go passive is to make sure that you capture some of those big winners. Like a lot of people, when they're talking about the travails of active managers, they think it's active managers picking rubbish stocks. I tend not to think that that's the case. I think that the difficulty is when a lot of returns are driven by a few stocks. If you miss a couple of the big winners, then your returns relative to that benchmark index are just fall behind a little bit. So that's always in the back of our mind of how to navigate through that, and it's been a winning strategy since we launched. Like, a lot of active managers have struggled. At the moment, we wanted to retain exposure to the US equity market, and all that it represents, the dynamism of that economy. But we did feel that some of those tech stocks were going to be a source of volatility in the future, rather than the real drivers of performance. And so you don't want your portfolio, when you're saying you're providing a diversified portfolio, you don't want too much concentration risk. So we've participated in it, but we've also added an ETF which takes an equal weighted approach to the S&P 500, which has been lagging this year, but gives us confidence that we've got that broader exposure. We're not going to live or die by the performance of those individual names that you've mentioned. And one like further thing on that, even though we've allocated, say, 20% of our US equity allocation to an equal weighted strategy, which has definitely lagged year to date, our US equity portfolio is still beating the average active manager, which I think is quite interesting, and because it sort of serves to some of the challenges of navigating through all of those sort of behavioral constraints that people that are investors are always hampered by.
Brilliant. No, thank you for that full response. I really appreciate you touching on the importance of concentration risk there as well, because I think a lot of people get into the FOMO of it all. They see, Meta, Nvidia, and so on and so forth absolutely soaring, as well as Tesla, and they go, "Oh, I need to buy some of that now." It's like, maybe just calm down a little bit,
Yeah.
and watch it and such. Now, Netwealth are an innovative platform. It's tech-led, as you've touched on already. A piece of McKinsey research came out and estimates that artificial intelligence may deliver an additional economic output of circa 13 trillion by 2030, increasing GDP by 1.2% per year. And have Netwealth considered any further AI innovations regarding their platform, and maybe tweaking some things to make things even more efficient going forward?
Yeah, I think it's a really interesting topic, and I think even now, you mentioned Nvidia before, and people seem to have most confidence in the old analogy of it in a gold rush, sort of making sure you own shovels and things like that, rather than sort of going out and exploring yourself. So I think a lot of people are uncertain as to where those future winners are going to come from. From our point of view, we're trying to think about how efficiency can help across every strand of the business. So within the investment component, it's I think you can obviously see immediately that there are sort of boundless opportunities out there, but also all other parts of our business is quite important as well. So when we think about our client advisors, so we've got a team of 8 client advisors who can offer different levels of advice, or regulated advice with a capital A, or perhaps just sort of more basic guidance on people's investment strategies. And that's where you can see AI tools becoming a lot more helpful of delivering the efficiency of that guidance. So you can get good structures in place to make sure that you don't have to spend as much time as an individual advisor, making sure that the client interests are all aligned properly. And then on the developer side, so half of my colleagues are developers, so they work within the tech team building the platform, and there's all sorts of implications for I think for open source coding and the rest of it, of how they can streamline all of the work that they're doing, either as sense checking what they've done, or a sort of automated proofreading of the work that they put in, as well as using other streams that our CTO is probably better qualified to speak on rather than myself. But I think it's fascinating to watch it, and I think usually a lot of people get too worried about the negative implications of new technology, rather than thinking about how we can embrace something and use that as a sort of a boost to human endeavor.
Brilliant. Thank you for that full response. I appreciate that. Now, talking about innovating, we're talking about AI, but you've already started or launched another latest innovation. By that, I mean My Netwealth. Can you tell our audience about that, please, and how they may be able to utilize it?
Yeah, so we're really excited about it. So I guess a lot of the platform, the original Netwealth platform, has been built to provide a lot more transparency, to help people understand what's happening with their investments, and to help project into the future what their situation might look like through different life events and types of investments. We wanted to take it a stage further, and so providing a free tool, so you don't need to be a client to use it, but it's a way that you can bring all of your different investments from different places all into one place, so that you don't have to monitor everything with a spreadsheet, and we can identify the nature of what that investment represents, and so that'll help you in terms of understanding what's going on, but also projecting the future performance of different asset classes. And so it's really to enable people to to help plan things a little bit better from their overall financial state of mind. And then leading on from that, if they want to then pick up the phone and speak to one of our advisors who can offer that guidance, so that we'll have a conversation, and then that will produce a sort of a semi-automated guidance report for them in an efficient way.
Brilliant. Thank you. I've only got a few more questions for you, but I need to touch on your own personal investing strategy as well. You touched on you are part of the Netwealth network, and you've got your family's investments in there. But can you tell me about your own strategy? Do you just apply it to the Netwealth portfolios, or do you do anything outside of that regarding your own personal investments?
Yeah, no, I'm everything is centered within Netwealth. I think I'm pretty boring in that regards. I've got lucky enough to have a house, and everything. Then my ISAs and my pension are all invested with Netwealth. I guess my pot three would be being a small shareholder within Netwealth itself. So we try to provide the opportunity for everyone who works here to earn a bit of ownership of the company, which I think is a really good initiative. But that's my pot three.
Brilliant. No, I really appreciate that candor, and thank you for sharing that. Now, with regards to you've got 3 boys, I believe.
That's right.
Do you put in? Sorry.
That's right. Sorry. Yeah.
Yeah, 3. So I thought I got it wrong then. Giving you another one. So do they have investments going in from the grandparents, from yourself? Do they do it on a regular? Do you put them in on a regular basis, or is it sporadic and lumpy?
Um, I guess it's a little bit of both. We try and plan a little bit, and then they've got grandparents that are like to give them little gifts every now and then. Everything goes into their Netwealth JISAs, their risk level 6 investors, and they really like the way that they can see what is in their portfolios. They know that I look after it, so they can be pretty harsh judges at times. Asking me why I don't have more Tesla and things like that
Yes.
whenever we see a Tesla. But I think it's great in terms of having an understanding of money and encouraging an attitude and an aptitude to investing, and it's something that they take a lot of enjoyment from.
Brilliant. And they're getting their own back because I hear that you are also a coach for a junior football team. Is it that the team that one of them plays for, or?
Yes, yeah. So I'm a coach for the mighty Milford Pumas, playing the Surrey Primary League. I've coached each one of them at some stage. I keep demoting myself to go down to the younger year groups, so the kids are a bit nicer at that age. So I look
Yes.
after a group that are going into the under 12s next season. Got high hopes.
Brilliant. No, I wish you well. Now, I'm going to wrap up with a couple fast fire questions for you here, Ian. Firstly, there's loads going on regarding the macro environment. And I just wanted to get you to touch on your current views on markets regarding inflation and interest rates. If you just be so bold. I'm not asking you to nail it on the mass to say Ian thinks that, just a general sort of viewpoint, please.
Sure. Well, I mean, obviously, it's the massive topic that's been driving markets for a number of years now, and together with my colleague Jared Lyons, we feel as though we've had a pretty good handle on the inflation story that's been driving markets the past couple of years. Um, we're at a very interesting point now, I think, where you're going to start to see a bit more divergence in terms of the inflation experience. We know that the UK, for a combination of reasons, has had a slightly more stressed experience than other places. There was good news last month in terms of inflation starting to come down. I think it's I think I'd agree with consensus that you're going to see headline inflation drop, reasonably quickly. The trouble, of course, is what that core inflation number is doing, and um, the one sort of nagging concern I think that thinking about quite a lot at the moment is that the market thinks that the UK and European economies are going to have to deal with higher inflation than the US for a given period of time, and that the central banks are going to have to respond to that. Now, I think the Federal Reserve is meeting today. The expectations are that they are closer to the end of their journey now. Markets are pricing in decent level of cuts from the US interest rates in the next few months. Whether or not they come through, not too sure. But I think it's going to be interesting to see how the central banks in the UK and Europe try to handle the situation when the US is on more of a clear sort of easing path, and they're still feeling the pressure of high inflation at home. I think the risk of a policy mistake is really increasing. Arguably, you could say that they're too slow to get started on this on the rate hiking journey. It'd be really a pretty bad impact if they were too late to respond to the slowing economy pressures as well. And some of those indicators that came out this week on surveys from manufacturing industries paint a pretty stark picture. Now we know that manufacturing isn't as large a component of economies as it used to, but it still tends to have like quite a strong delta in terms of the direction of travel for economy. So we might see servicing parts of the economy slow as well. And so Yeah. I think it's something to watch out for, the sequencing that different markets have to face.
Thank you for that thorough response. Absolutely brilliant reply. I really appreciate that, Iain. Thank you. I've got one more question, and then I've got the final question. Okay. This is just your opportunity, if you could, Iain, be so kind enough to reiterate to our global listeners of ultra high net worth individuals, institutions, and private investors what makes Netwealth such a unique proposition and different wealth management company.
Well, I think it's the idea that we're trying to combine, you know, bang up to date technology with the human element. So we've got experienced professionals doing things in a sensible way across either, you know, speaking to clients on an individual basis or investing portfolios, making sure that we've got the processes in place that can enable us to deliver quality proposition at scale. And because we can do that, it means keeping a lid on costs that we think are just unnecessary in the rest of the industry. And there's a lot of, you know, there's a lot of road to go in terms of the journey for the UK wealth management industry, but we think that the way that Netwealth is set up as a company, and particularly as an investment proposition, is much closer to where the rest of the market is going to look in 5-10 years. And so we're really excited that you know, clients are recognizing that and supporting us, and yeah, it's an exciting thing to be part of.
Brilliant, thank you. Now, my final question, and you'd be pleased that it's the last one.
Okay,
Iain,
you're building this up quite a lot.
You've had over 2 decades of experience, many different experiences in the investment and wealth management industry. My final question to you is this: what are you most proud of, and why?
Gosh, from a professional point of view, I don't know. I'm proud of what we're doing here. I'm proud of you know, being you know, having the courage to join something from start, and launching an investment service that I think is doing a really good job in terms of delivering a strong investment outcome for our clients, not trying to pretend that we're doing anything we're not. We're just offering sensible propositions in a tech-enabled way at low cost, and the compounding effect that we've managed to pass on to clients is adding value. And you can see that through the performance numbers. So I'm proud of that.
Brilliant. Absolutely brilliant. It's been an absolute delight, Iain, to have you on this Investing Matters podcast with me. Ladies and gents, that was Iain Barnes, the Chief Investment Officer of Netwealth. Iain, thank you ever so much again for joining me again today, sir. Thank you.
Thank you, Peter. It's a pleasure.
Speak soon. Take care. God bless you.
Thank you for taking the time to listen to Investing Matters. Be sure to check out the London South East website for free tools and info to research your next investment. You can also join in the conversation on our social media channels. And don't forget to subscribe to our YouTube channel for more content, including our CEO interviews. Catch you next time.